The U.S. housing market is one of the most important economic sectors in the country. It accounts for a significant portion of GDP and provides jobs for millions of people. The market is also closely linked to the overall health of the economy. In recent years, the U.S. housing market has experienced a number of challenges, including the Great Recession, rising interest rates, and supply chain disruptions. However, the market has shown resilience and has begun to recover in recent months. This analysis will examine the current state of the U.S. housing market, as well as the factors that are likely to influence its future direction. The U.S. housing market is currently in a state of flux. On the one hand, home prices are rising at a rapid pace, and inventory levels are very low. This is creating a seller's market, where buyers are competing fiercely for homes. On the other hand, mortgage rates are rising, and there are some signs that buyer demand is beginning to cool. This could lead to a slowdown in price appreciation in the coming months and years. There are a number of factors that are driving the current state of the U.S. housing market. Pent-up demand. There is a lot of pent-up demand for housing from buyers who were unable to purchase homes during the pandemic. This is due to a number of factors, including low interest rates, rising wages, and a desire to move to more spacious homes. Low inventory. The inventory of homes for sale is very low, which is driving up prices. This is due to a number of factors, including supply chain disruptions, rising construction costs, and a lack of new construction. Rising interest rates. Mortgage rates are rising, which could lead to a slowdown in buyer demand. However, interest rates are still relatively low by historical standards, which means that homes are still affordable for many buyers. Economic growth. The U.S. economy is growing at a healthy pace, which is supporting demand for housing. This is due to a number of factors, including low unemployment, rising wages, and strong consumer spending. Most economists and real estate experts expect the U.S. housing market to remain strong in the coming months and years. However, they also expect that the pace of price appreciation will slow down somewhat. According to a recent forecast from Zillow, home values are projected to increase by 5.5% over the next year. That's down from the 16.9% increase that was seen in 2021. However, there are some potential risks to the housing market outlook. These include rising interest rates, rising inflation, and economic recession. The current state of the U.S. housing market has a number of implications for buyers and sellers. For buyers, it means that they will need to be prepared to compete for homes and have their finances in order. Buyers may also want to consider working with a qualified real estate agent who can help them navigate the market and get the best possible deal. For sellers, it means that they are likely to be able to sell their homes for a good price. However, sellers may need to be patient, as there may be more competition from other sellers. The U.S. housing market is currently in a state of flux. Home prices are rising at a rapid pace, and inventory levels are very low. However, there are some signs that buyer demand is beginning to cool, and mortgage rates are rising. Most economists and real estate experts expect the market to remain strong in the coming months and years. But the pace of price appreciation is likely to slow down. Buyers and sellers need to be aware of the challenges and opportunities that the current market presents. Buyers should be prepared to compete for homes and have their finances in order. Sellers should consider working with a qualified real estate agent and be patient, as there may be more competition from other sellers. In addition to the factors discussed above, there are a number of other factors that could influence the future direction of the U.S. housing market. These include demographics and technology. The U.S. population is aging, and this is likely to lead to a decline in demand for single-family homes and an increase in demand for multifamily housing. Technology is changing the way people